Hello everyone. After a very long period of time, I am coming to post some videos on income tax returns. Sorry for the inconvenience that has happened for you because of a late posting of videos. So in today's videos, a very important topic, that is who are required to file their income tax return during this assessment year. This is a June season, a June month. You are very busy in filing your income tax return. The due date is also approaching, that is 31st July for the salaried people and also pension holders. So in today's video we are going to discuss with regard to the detailed explanations that who are actually required to file their income tax return. So this is here Abhijith Acharya welcoming you all for today's video. So let's discuss today's topic. First of all, I would like to say about the agenda for today's videos. In other words, the topics covered in today's videos. First one is who are required to file their income tax return. The second one is very important, when to file your income tax return. What is the due date of income tax return filing due date? The third one, the consequences of not filing your income tax return. If you don't file your income tax return, even though you are eligible for filing our income tax return, even though you are responsible for filing your income tax return, the consequences of the same. That three topics I will going to discuss with regard to the same in this today's topic. Okay, so without waiting further time, let's get today's topic. That is first topic, that is who should file their income tax return. As per Income Tax Act 1961, there are a lot of persons who are required to file their income tax returns compulsorily. First one is the companies and firms. Companies in the sense the private limited companies and also the public limited companies and any other companies which are registered as per Companies Act 2013 or Companies Act 1956. The second one is other than companies and firms. In above, actually I have forgotten to tell about firms. Firms means partnership firms, which also includes LLP, that is limited liability partnership firms. Okay. And second class of persons are those other than companies and firms whose total income is more than basic exemption limit. Basic exemption limit is, as of now, is 2,50,000. If your income crosses 2,50,000, you have to compulsory file your income tax return. If you are a senior citizen, that is 60 plus. If you are a resident senior citizen, that limit will be enhanced to 3 lakh. If you are a super senior citizen, that means your age is more than 80. You should be a resident, then that limit will be enhanced to 5 lakh. If you cross your income more than these criteria, this threshold limit, then you have to file your income tax return compulsorily. Okay. The third criteria is other than companies and firms who have deposited in an actual current account in a banks or financial institutions or a cooperative bank in a previous year more than or equal to 1 crore. Okay. This is very important crucial point. Okay. The next thing, other than the same companies and firms who have incurred expenditure with regard to the foreign trip of more than or equal to 2 lakhs in a previous year, have to file their income tax return compulsorily. So these are the 4 criteria, and let's discuss the upcoming classes of persons who are required to file their income tax returns. Let's go further. Those other than companies and firms whose electricity bill is more than equal to 1 lakhs in a previous year. Very shocking news, right? Even though their even though they don't have income below, actually that means if they have income below their threshold limit, that is 2.5 or 3 or 5 lakh, if their house electricity consumption is more than 1 lakh in that previous year, then they are also required to file their income tax return. Very interesting. Next criteria, even though their income, that is total income, is below that basic exemption limit, but in case they are if they have entered into any business and in that business their sales or turnover is more than 60 lakhs in a previous year, they also file their income tax return. Very important, very interesting. Next, if that person is engaged in any professional, that is a chartered accountant or a lawyer or any other medical practitioner, any other, etc. If their total income is below basic exemption limit, but their professional gross receipt is more than 10 lakhs in a previous year, they also file their income tax return compulsorily. Okay, then in their account, the TDS, that is tax deducted at sources, or the tax collected at sources is more than 25,000, or in case of senior citizen it is 50,000, more than 50,000, they also get their income tax, they have to file their income tax return to claim the refund. In other words, if they want to claim the refund, they have to get their books of accounts compulsory. That is very important. What do you mean by TDS? If you deposit an amount in a bank, and that bank is providing interest more than 40,000 and more than 50,000 in case of senior citizen, and below and more than 40,000 in other than senior citizen, then bank is required to deduct the TDS at the rate of 10% before providing that interest income to the depositor. So this is the actual 10% of that income will be credited in your actual income tax portal. If you want to claim that refund, you have to get your books of accounts compulsorily. Understood? And they have fixed the limit is 25,000 or more, or 50,000 or more in case of senior citizen. Very important. And the last criteria, if you deposited more than or equal to 50 lakhs in a savings bank account, very interesting. In earlier stage, we have discussed about regard to the current account, but in this case, 50 lakh, especially in savings bank in a previous year, then you have to file your income tax return compulsorily. Very important thing. So these are the categories of people who are required to file their income tax return compulsorily as per the Income Tax Act specified thereunder. Okay, then sir, when to file their income tax return? So this is our next topic. I am going to discuss with regard to the detail when you have to required to file their income tax return, within which time you have to file your income tax return. Okay, the first one is 31st on or before 31st October of the relevant assessment year. For this, for example, for previous year 22-23, you have to file your income tax return on or before 31st October. For which case number 1, if the person is a company. Second one, if a person whose accounts are required to be audited by a chartered accountant, there is a specified clause under section 44AB as per our Income Tax Act 1961. It specifies some of the actual limits. If you cross that limits, then you have to get your books of accounts compulsorily. In the next videos, I am going to discuss with regard to the who are required to get their books of account audited in the next upcoming videos. But as of now, please remember, if you are actually fall under those categories who are required to get their books of account audited, then for them the due date is on or before 31st October. Okay. The next is the partners of a firm which is liable for audit. Those persons who are required to get their books of account audited, right? If it is a partnership firm, the partners of that partnership firm also file their income tax return on or before 31st October. If the partnership firm is liable for audit under section 44AB, then its partners also required to file their income tax return on or before 31st October. Please remember. The next due date is 30th November. Actually, very different. Actually, this is a rare case in India. This is applicable to those who are undertaking the international transactions and also liable to furnish their report under section 92E. That is, if you are a person who are undertaking who are undertaking those businesses with the foreign, and you have to furnish the report under section 92E, then for you, then the due date is on or before 30th November. Understood? Then last due date is a very famous due date, that is 31st July. This is applicable for almost 70% in India, because this is applicable for all of the salaried people and all of the pension holders, and other than those three categories, if you are having any long term capital gain, or if you are any actual business income or a professional income, and which is not required to be audited under section 44AB by a chartered accountant, then the due date is 31st July. This is the nearest due dates that is upcoming as of now. So please remember these due dates. It is very important. It is very crucial for your case. Okay. Then, sorry, if I don't file my income tax return, what will be my consequences? What will be the consequences? Yes, definitely. I'm going to discuss with regard to the next topic, that is the consequences of not filing your income tax return, even though you are eligible, you are responsible for filing income tax return. Okay. The first criteria, that is late fee. The late fee will be applicable of rupees 5,000 in case if your total income chargeable to income tax is more than 5 lakh. In case if your total income is chargeable to income tax is below 5 lakh, more than basic exemption limit, then the penalty, that is the late fee, will be 1,000. This is specified under section 234F of Income Tax Act 1961. So this is a very strict for if you don't file within, for example, if you're a salaried holder, your due date is 31st July, right? If you don't file your income tax return within that day, then late fee will be applicable as per their income criteria. If your total income is more, if your salary is more than 5 lakh, then 5,000 will be liable as a penalty or a late fee. In other words, if your salary that is chargeable to income tax is below 5 lakh, then penalty or the late fee will be 1,000. Okay, please remember, this is very crucial point. You have to file your income tax return within the due date. Try to file your income tax return within the due date. The next two consequences will be interest. Interest will be liable at the rate of 1% per month or part of the month. For example, if you don't file your income tax return within 31st July, then if you file your actual income tax return on 5th August, even though it is below 1 month, 1% of the tax liability, final tax liability, will be liable on you as an interest. Then you have to pay the tax liability along with that interest portion to the income tax government. So be careful while filing your income tax return. Try to file your income tax return on or before the due date specified there under. Okay, the next consequences will be, if you file your income tax return after the due date specified there under as per income tax act, then your return will be considered as a belated return as per section 139 subsection 4. If you file your income tax return after the due date, then your income tax return will be considered as belated return. There will be no consequences as such, but you will be charged of a late fee or an interest, that's it. But your return will be considered as belated return. It will not make a big problem as of now. Okay, try to file your income tax return before the due date, that is 31st July if you are a salaried people, or some other case 30th November if you are transacting if you are having a transaction with the international country, international foreign country, etc. And for those who are required to get their audit of books of account audited, for them that is due date is 31st October, or the company similarly. So this is a brief explanation of today's videos. If you like the video, please press the like button. If you have not subscribed yet, please subscribe to my YouTube channel. Signing off, CS Abhijith Acharya. Thank you one and all. Thank you. If you have any doubt, please put your doubts in the comment section. I will try to reach out that. Thank you one and all. Bye bye.